The markets are currently closed as it is Saturday, January 10, 2026. Looking back at the final moments of the regular trading session on Friday, January 9th, Oklo Inc., trading under the ticker symbol OKLO, finished the day at a price of 105.32. This represents a significant intraday jump of 7.91% or 7.72 points from its previous close of 97.60. If you were watching the tickers in real time, you saw an even more aggressive move earlier in the day when the stock touched an intraday high of 115.72, signaling a massive burst of institutional and retail interest that momentarily pushed the valuation toward new heights before settling into the triple digits. The trading volume was nothing short of staggering, with over 33.9 million shares changing hands, which is far beyond the typical daily average for this company. What most investors are looking at right now is the price action, but the reality behind this move is far more interesting than a simple green candle on a chart. While everyone is talking about the 2026 nuclear renaissance, the real insight here is that the market is no longer treating Oklo as a speculative science project, but as a critical piece of the global artificial intelligence infrastructure. For a company that has been frequently categorized as a pre-revenue venture-backed startup, this week's massive deal with Meta Platforms has effectively shifted the narrative from if they can build it to who is going to pay for it first. The expectation among the general public was that nuclear energy would remain a slow-moving, heavily regulated sector with timelines measured in decades. But the reality is that the AI race has forced a compression of those timelines that no one saw coming 12 months ago. Investors often look at high flyers like Nvidia stock or Apple stock to gauge the health of the tech sector. But the bottleneck for those companies isn't just chips or software anymore. It is the raw electricity required to run them. This is where Oklo has found its niche. The common ground among market participants is that small modular reactors, or SMRs, are the future of clean energy. However, the contrary take that we need to address is whether the market is overestimating the speed of regulatory approval. While the Meta deal involves developing a 1.2 gigawatt power campus in Ohio, the actual hardware hasn't been deployed at scale yet. People are buying the promise of 2030 and 2034 today. And in an environment where interest rates and capital costs remain sensitive, that is a bold bet that requires a deep look into the institutional activity we saw on Friday. If you are using tools like Schwab Intelligent Portfolios or managing your own individual brokerage account through Fidelity, you've likely noticed the sector rotation into utilities and alternative energy. But Oklo isn't a traditional utility. Within the Fidelity brokerage ecosystem, or even on more retail-focused platforms like the Robinhood trading app, the search interest for OKLO has been spiking alongside names like Vistra and Constellation Energy. The institutional ownership data from this week shows a 17% increase in long positions from major funds, suggesting that the smart money is starting to view nuclear as a defensive growth play. When you see a stock move from the $70 range to over $100 in a matter of days, it's rarely just retail traders on a Robinhood trading platform. It's a fundamental repricing of risk. The daily swings we've witnessed recently are a direct reaction to the hyperscaler commitment. Meta isn't just signing a letter of intent, they are prepaying for power and providing upfront funding for fuel procurement. This is a massive shift in how these projects get financed. Traditionally, a nuclear project required massive government backing or decades of utility ratepayer guarantees. Now we are seeing big tech act as the primary financier. This de-risks the project for Oklo significantly because it provides a clear pathway to commercialization without having to rely solely on public markets for every dollar of capital expenditure. If you are self-investing or looking for investment help on various investing sites, this is the dynamic you need to track. The relationship between the energy provider and the tech giant is becoming the new backbone of the market. Before we get too far into the future, let's look at what Oklo actually is. Founded in 2013 and chaired by Sam Altman, the company focuses on fast fission technology. Their Aurora powerhouse is designed to be a compact, liquid metal-cooled reactor that can run on recycled nuclear fuel. This is a key differentiator. While other companies are trying to build smaller versions of 1970s light water reactors, Oklo is trying to close the fuel cycle. They are working with the Department of Energy to turn what we currently call nuclear waste into a power source. This business model isn't just about selling electricity, it's about waste management and long-term fuel security. Their goal is to provide 24/7 carbon-free power for at least 10 years without needing to refuel. That is the expectation. The reality is that the Nuclear Regulatory Commission, or NRC, has historically been very cautious with non-traditional designs. Oklo has had applications denied in the past, and while they have made significant progress since then, the regulatory hurdle remains the biggest known unknown in this entire analysis. For those of you managing your portfolios through SoFi Invest or using the Interactive Brokers platform, the volatility in OKLO is something you have to be comfortable with. It isn't a set-it-and-forget-it stock like some of the Fidelity ETFs or Fidelity mutual funds you might find in a retirement account. This is a high beta play on the future of the grid. If you look at the Fidelity mobile app or the Robinhood stock trading interface, you'll see the 52-week range for this stock is incredibly wide, from a low of 17.42 to a high of 193.84. We are currently sitting in the middle of that range. The market is trying to find a fair value for a company that is essentially building the gas stations for the AI era. Comment below how many shares of Oklo you currently hold, or if you prefer sticking to broader plays like Tesla stock or established energy giants. It's always interesting to see the split between those seeking high-growth individual stocks and those sticking to a more balanced, intelligent portfolio approach. The momentum we saw on Friday was driven by the realization that power is the new oil. In the online investing world, we talk a lot about moats. Oklo's moat isn't just its technology, it's its site permits and its relations. They already have a site use permit from the Department of Energy for a location in Idaho, and the new Ohio project with Meta adds another massive anchor to their pipeline. When you are looking at investing sites or seeking investment help, you often hear about the first mover advantage. In the nuclear space, being first means you are the one who works through the regulatory kinks so that the second and third movers have a clearer path. Oklo is definitely in that first mover position, for better or worse. Recent earnings reactions in the broader sector have shown that the market is willing to look past current losses. Oklo is still reporting net losses as it spends on research and development, as long as the commercial pipeline is growing. With the Meta deal adding 1.2 gigawatts, their total planned capacity is now reaching levels that make them a serious player in the independent power producer space. This isn't just about micro-reactors for remote villages anymore. This is about industrial-scale energy for the world's largest companies. Whether you are using Robinhood Investments or Fidelity Wealth Management, the question you have to ask is whether the current market cap of roughly $16 billion is justified by a revenue stream that won't fully materialize until the next decade. Interactive Brokers trading data suggests that short interest in OKLO remains relatively high, which can lead to the kind of short squeeze mechanics that cause these 15 to 20% single-day jumps. When positive news hits, the bears are forced to cover, adding fuel to the fire. However, a long-term investment requires looking past the squeeze. Macroeconomic pressures, such as the cost of HALEU or high-assay low-enriched uranium, will be a major factor. Oklo needs this fuel to run its fast reactors, and the supply chain for it is currently limited. any disruption in the development of domestic fuel sources could be a major risk factor that would cause the stock to retreat as quickly as it rose. If you were using a SoFi active investing account or the Interactive Brokers account to trade these swings, you are likely looking for the next catalyst. The next big thing for Oklo will be the formal approval of their preliminary documented safety analysis or further milestones in their fuel fabrication facility at Idaho National Laboratory. These are the boring updates that actually drive the exciting price moves. Investors who only follow the headlines on Robinhood crypto or general news feeds often miss these regulatory steps that institutional investors are watching closely. The expectation is that because Sam Altman is involved, the path will be smooth. The reality is that the NRC does not care about celebrity chairmen. They care about safety protocols and environmental impact. Let's pivot for a moment to the future outlook. There are two main scenarios